What up, Investor Nation? We are back with one of my favorites, JD. What's good, my boy?
Doing well. How are you, man?
I'm good, brother. Keeping it light today.
Yeah.
We're having a little fun. This isn't the market. This isn't the market update. This is IFC quick tips.
Cool.
So we'll leave Brian to the fancy stuff.
Yeah.
All right, cool, man. We had a couple quick questions for you, but the first one's going to be, how do interest rates impact our borrowers' flips?
Yeah. So I think there's a big, somewhat misconception out there when we're talking to some of our borrowers, where when there's movements in interest rates, they think, that's immediately going to impact their next deal, what coupon they're going to be offered by lenders on their next deal. And the reality is with the shorter term loans, like your fix and flips, like your ground up, interest rates are a lot stickier. And so when the Fed started to cut in September of 2024, it really took about 9 months before yield curve normalized, securitization market opened up, investor demand came in, before we saw those gross rates to borrowers start to move. So I just wanted to clear that up. I think it's a common question we get. Hey, I saw rates fell. Is what can you offer me? And on the short term stuff, it's stickier. But where it's really important and where it does matter is when you're thinking about your exit. And it affects both if you're looking to, build to sell or fix to sell, that'll be impacted, as well as your build to rent, fix to hold. So if interest rates fall throughout the course of your project, what you could see towards the end of your project is increased demand, because now borrowers that are looking to buy have cheaper financing for a long-term sort of purchase mortgage, or even on the renting side, like when you refi out, you're going to have a lower rate. So obviously that's great. But on the flip side, there are some concerns that you should be aware of when you're underwriting your flip today. And that's, say I'm a borrower, I want maximum leverage on my fix and flip, right? I want 9,100. That's great. But if rates rise throughout the course of my project, impacting sort of, that end borrower demand,
And value.
Yeah. So now because borrower can't get the cheaper financing to buy my house, that's going to put, downward pressure on the value. So then you might be like, all right, backup plan. Let me just try to refi and hold it as a rental. But where that gets dicey is you got this maximum leverage loan up front. So your payoff is as high as could be.
Yep.
And now, since rates have moved against you and you're trying to refi, you have a higher cost of capital in your DSCR calculation. So maybe now your DSCR is under 1, your property's not going to cash flow. So your lender's like, hey, we can't give you that 75 cash out. We got to drop you down to 70. Now you're bringing cash to close just to get out of your original loan. So those are the important things I think about when, we're talking to borrowers. And that's why it's super important to work with your lender up front, talk through your exit strategies, stress test different market scenarios, because maximum leverage isn't always the best play.
Yeah, I'd say that's incredible advice, right? So if you're a borrower, what he's telling you is you got sensitivity test both ways. Everybody wants to be the best case scenario, and rates are going to move, down, and up. It's going to increase my value, my property, and drive more demand. In reality, interest rates have been ping ponging now for the last couple of years, and so you got to stress test both directions to make sure you have an ample exit strategy, whether it's sell or refinance. So that's great advice, I think, especially in light of what we've seen. And while I have him here, I'm going to put him on the spot, guys. So while I have him here, we got, he's like, uh-oh. So I was going to get a quick market updates. We had the Fed meeting yesterday. I know you didn't get a chance to download on it. I was picking his brain this morning. But straight of a move, 10-year blew out. Feds talk about, higher inflation for longer, oil prices, dot plot potentially now showing an increase. What do you think? Just give me a prediction off the cuff.
Yeah, I don't know.
It's like the fighting Phils versus the Dodgers, baby.
Yeah, I can't say like geopolitics is
Your specialty?
strength, but yeah, it's difficult. I know my portfolio is hurting from what the president did, and
Sell off, baby.
yeah, if oil stays elevated for a while, like that's going to cause serious repercussions throughout the market. And so it's like, when I think about a prediction, I have to predict, is this war going to end, or is it going to be quick, resolve? Is it not? And I don't know, my gut leans towards this is going to take longer to be resolved, than I would hope. And I think that's what the market's pricing in, is that this is going to take longer to be resolved. And because that's what you're seeing, we hammer this point all the time on the webinar, that interest rates are really just a reflection of where the market thinks they're going. And so market's telling you that this conflict in the Middle East is going to last longer. And this fear of inflation is real, given that, oil has blown out and looks to, remain elevated for the foreseeable future. So it sucks because 2 weeks ago on the webinar, I was like, 30-year mortgage rate dropped below 6% for the first time in like 2.5 years. And then that was on a Thursday. And then that Saturday is when the United States bombed Iran. Bad timing.
Yeah. Your borrowers, it's going to be tough spring season. So like what Jack said earlier in the call, make sure you're re-underwriting your deal, especially if you're going to see your lender soon, because that's going to be a critical component on what is your strategy next. And if you have LP capital, you need to be having these conversations about what this could look like on a cash and refi. What you do not want to do is to allow default interest and extension fees to degrade your equity returns even more than they already are if you can't get out of a project. So JD, I know you hate being on the spot, but you always do so good, man. Appreciate you being here today.
Thank you.